All right. Good evening. Good afternoon once again. And then I believe we are doing great. So we'll be continuing today's topic on PM or MA, PM/MA. We'll be continuing from where we stopped the last time. Okay, we actually dealt with chapter 1 and 2 last class. So we have left the chapter 3, chapter 4, chapter 5, chapter 6, chapter 7, chapter 8. We will revisit it later. The reason why we are trying to just uh, work on this topic is because many students actually think that there is still time, whereas there is no time again. So we need to build the foundation. Are you getting me now? We need to build solid foundation for the subsequent tutorials we'll be having. So by the special grace of God today, we'll be dealing with the chapter 9 of PM. And as I've always been saying that for you to actually be in PM class, you must have foundational knowledge of that is MI, foundational knowledge of PM that is MI. So this video is actually good for both PM students and MI students. So today we'll be talking about cost types and cost analysis. What are the types of cost we have and what are the analysis of cost that we actually have? All right, so let us delve into the tutorial proper. This chapter discusses cost management, accounting, and quantitative method, linking them with critical success factor and
Mr. Israel, good evening. Good afternoon. I can't hear you.
good afternoon. Okay, can you hear me now? Can you hear me now?
Yes,
All right, thank you so much.
I can hear
So
you.
you can hear me now, right?
I can hear you now.
Okay, you also came late to the class. All right, it is well. So, all right. So we just want to, as I was saying earlier, I was saying that just want to build the foundation. Yes, this is chapter 9. I took chapter 1 and 2 the last class. This is chapter 9 now. The reason why we are trying to do that is because there are some subsequent topics we'll be talking about that actually request us to have basic knowledge of all these costing principles. So that it's not be as if we are saying what we are not familiar with. We just need to delve into some things. There are some bulky notes or voluminous notes that if we say we should start, like we should be explaining it over and over again, we'll not be able to finish everything before the time will be gone. So we just need to build some foundations, and then we'll keep on building on those foundations. We can now start talking about our CVP and start talking about other things. But we need to understand what cost means. At least this is performance management. So the learning outcome is that on successful completion of this chapter, readers should be able to understand the concept of cost and cost analysis, identify cost types and classes, calculate cost of product using marginal costing and absorption costing approach, and compare absorption and marginal costing statements. So I don't think this is actually big deal. It is not special things to us. For some of us that we are coming from accounting background, we should have done all these things during our undergraduate days. For those of us that we are graduate already, and for those of us that we are still in school, at least we will still have knowledge of this thing. So these are the objectives, what we want to achieve after we are done with this particular chapter. All right, explain the cost, explain the concept of cost and types of cost. Concept of cost. Cost revert to the value of resources sacrifice to obtain or produce something. If you say cost, what is cost? Cost revert to value of resources sacrifice or produce sacrifice to obtain or produce something. Whatever thing we actually sacrifice to actually obtain something else, it is referred to as cost. When you go to the market, you go with something, and as they are giving you, let's say jute or let's say rice, you are giving
Sorry,
them
what
something.
page are you guys? What page? Sorry.
All right, as at now, I'm actually in page 186. page 186. But don't be familiar with all this page too much because I will just bring something else as you can see here. I have one question here. So that one, if you want to get the page, you will need to go and get the book. So, but this one, as far as this one is concerned, I am in page 186. All right. So I was trying to explain the concept of cost. You say cost is that resources that you sacrifice to obtain or produce something. It represents the amount that must be given up to acquire a good or service, and and is fundamental in accounting, economics, and decision making. So I believe you should be able to explain what cost means now. That it is the value of resources you are sacrificing to obtain or to produce something. It also represents the amount that must be given up. That must be some of you now. You being in the class now, it is a cost because some people are sleeping. Though they want to write ICAN examination, but they think it is too early for them to start preparing for exam. Myself and Joseph were talking in the morning, we were speaking and we are saying that some of them now, they are not serious now. When the exam is now 2 weeks or 1 month or 1.5 months to go, they will now be looking for class where they can get expo. They will now be paying heavily. They will be doing a lot of things just for them to get whatever they want to get. Some of them, they will now be having night classes and the like. And then you cannot force your brain. You can't force it. It is better you start giving information to it systematically like this than you trying to overload all the information one day. So what am I trying to say is that you being in the class now, it is a cost. You are paying, you are giving the resources, your time, your energy, your money. You are giving it so that you can obtain value. You can obtain ICAN results. Yes, that paper itself is not what actually. So yes, it's good. The paper itself is good. The certificate is good, but the imprint ICAN is going to put on your body, like on your life, after you have actually successfully completed this your ICAN program. You will see that you will be better than before. It is a course. You want to get something, you want to get value, you want to get certificate, then you are giving up something. That is cost. So whatever the value of resources or the sacrifice you actually give in order for you to obtain something or to produce something is referred to as cost. Cost classification. Cost classification. Okay, let me try to relate it to what we'll be dealing with in PM. So cost now, cost of something like the money you are going to spend. Hey, coming to PM now, but generally we have costs we are actually incurring in order for us to get something. So cost classification. Cost classification involves grouping expenses based on similar characteristics or behavior. Classification involves grouping expenses based on similar characteristics. The other time when we were talking, I think one of our sisters, I think she made mention of distribution expenses, finance costs, administrative costs, and the likes. So that is a group that they have grouped those expenses together. The way we have it, as we have it in financial reporting, SBR and the likes, we also have it in performance management. After you are done with after you pass this ICAN PM now, you will be called performance manager. You become performance manager. So in performance management as well, we have classification of cost, how we group them. For those of us that we are working in accounting or in accounting department in various organizations, you will see that if you check their finance reports, they also group their own expenses. They group it, they classify it, they call some expenses, they say that this one they are maintenance expenses, they will say this one they are finance expenses, they will say this one they are administrative expenses, etc. So in cost, also in performance management, in management information system, even in cost accounting, we have classification of cost. All right. Now, the classification of cost can be by nature. We can classify the cost by nature. Please don't forget, by nature. This group cost based on type of resources consumed, e.g. material, labor, overhead, etc. When we are classifying cost by nature, it groups the cost into the type of resources we actually consume. An example of classification by nature is material, labor, overhead, etc. Now, we can also classify costs according to function. According to function, this group costs based on the business function or department they relate to. It group cost based on the what? Based on the business, based on the function or department they relate to. We can say this cost can actually be classified to production department. This cost can be classified to administrative department. This cost can be classified to selling and distribution department. That is classification according to function. When you get to, as we proceed now, you will get to a particular stage where I think, are you guys still okay? Maybe it is in MI that you'll be talking about overhead absorption rate. Yes, we still talk about overhead absorption rate, even in PF, because we will do variance analysis. And in variance analysis, when we are doing for um for is it not overhead? Yes, we are going to get to a particular place where we'll be calling overhead assumption rate. Okay, now for MI, even you will be doing apportionment, you'll be doing allocation of cost, etc. Though it may not be needed for a PM class to go to that, but at least we should have basic knowledge. So we can classify cost according to function. The function in this wise means those departments, either production department, the administration department, or the selling and distribution function or department. All right. We can classify cost according to its what? Traceability. According to its traceability. This refers to how easily a cost can be traced to a product, department, or activities. Underneath it, we have direct cost, we have indirect cost. And don't forget, they say that direct cost, you should remember this. You see that they are not giving you in details again. They are not giving it to you in details because they assume that you must have known the meaning of direct cost. They are the costs that can be directly traced to a particular cost center or cost unit. That is direct cost. They can be directly traced. We can trace it that, okay, the department that incurred this cost is this department. The product that incur this cost is this product. This particular product incur this cost. For example, you want to, let's say um, you want to produce, let's say, cake. There are some costs that is traceable to the production of that cake, such as cost of flour, if they use flour anyhow, cost of eggs, cost of sugar that you use in producing that cake. But there are some costs that is not directly traceable. Maybe you are going to the market to buy some things, and then you remember that you want to produce cake as well. You want to buy ingredients for the cake and for other things. You may not be able to trace it directly to the production of that cake. So we have direct costs, we have indirect costs. We can also classify costs according to behavior. Are we still together? Are we still together?
Yes, we are together.
All right. We can also classify costs according to the behavior. These classifications show how costs react to changes in output or activity level. This is where you'll be seeing high and low method. They will be asking you to use high and low method to separate costs. We'll be doing separation of costs. You can use high and low method. You can use regression analysis method, etc. So when we classify costs according to how that cost can react to changes in the output or activity level. Example, variable cost, fixed cost, mixed cost. We also have, I believe we all know the meaning of variable cost, fixed cost, mixed cost at our level. I want to believe that we know that. Fixed costs are costs that remain constant in total as output increase, but the cost per unit decreases as output increases within the relevant rate. These costs are costs that remain constant in total as output increasing, but the cost per unit decreases as output increase within the relevant time. Let's take for instance, maybe you are producing what are you producing? Tell me what you are producing. What are you producing?
I make popcorn. Okay, let's use that as an
You make
example.
popcorn. Let's say that you are now storing that popcorn inside a store. you have a building where you store it. Now, do you make it by in bags or in in quantity? You make quantities, right?
Yes.
Hey, let's say that you make like five quantities, maybe which I don't know the way you are. I don't know the way you measure it.
Let's
If
say
you are going
five
to
dozen.
buy, hey, thank you, 5 dozen. If you are to put that 5 dozen in a building, it is not going to increase the numbers or decrease the amount you are going to pay for the rent of that particular building. Let's say you now increase the quantity to, let's say, 20 dozen, and you have already paid the rentage at the beginning of the year. The landlord cannot come and say that, oh, because we were producing 5 dozen before or 12 dozen before, you now increase it to 20 dozen. You are going to pay additional money. No, because you have paid a fixed amount of money. So that is fixed cost. That is fixed cost. Fixed cost that the fixed costs are costs that remain constant in total as output increases. As your output increases, your fixed cost still remain constant, but the cost per unit decreases as output increase with the relevant rate. We have variable costs. These are costs that increase in total as output increases, but the cost per unit is constant at all level of output within the relevant range. Variable cost. For example, now when you want to produce 5 dozen, you will need certain level of material to produce that 5 dozen. Immediately you increase that 5 dozen to 10 dozens, the quantity you use, the quantity of material you use to produce 5 dozen will not be enough to produce 10 dozen again. You need to what? You need to increase that particular cost. That is an example of variable cost. They are costs that they vary, they increase as the level of activities, as the level of output increases, it also what? It increases. Yes, the cost per unit can still be constant. The cost per unit, the cost at which you are selling one unit may still be constant. All right. We have mixed costs. Mixed costs are costs that are partially variable and partially fixed. The total cost increase as output increases, but the cost per unit decreases with increase in output. That is an example of mixed cost. So we have separation of cost. I said it the other time. In many areas of cost and management accounting, we need to separate total mixed cost into variable and fixed components in the following format. So this is the format, or should I call it format or formula, where we actually that we use to separate cost. And most of us, we have been using this formula. It's just that you don't know that is what you are using. We have y is equal to a plus bx, where y is our total cost, a is our total fixed cost, b is our variable cost per unit, and x is number of units. X is number of units. X is number of units. Don't forget, when you want to separate cost, this is the formula. They can tell you that the total cost is this. If they give you variable cost, then you can calculate for the fixed cost. But in many circumstances or in many scenarios, they will give you total cost. They will not give you activity level. You will not be the one to determine the variable cost. Then they cannot ask you to calculate for certain they will not ask you to calculate for the fixed cost or the variable cost for a particular numbers of units produced or activity level. Can I call it activity level? Numbers of units to be produced or units produced. So that is how they normally structure it. But take note of this format or take note of this formula. Mixed costs can be separated into their fixed and variable costs. In a scenario whereby they are, total cost, it comprises variable cost, it comprises fixed cost. That is mixed. So they can ask you to separate it. So while separating it, we can use the following method. We can use scatter diagram, where when applying this method, individual data points are displayed on a graph and a smooth trend line is sketched freely across the scatter to visually represent the overall distribution. So we can use scatter diagram, we can use engineering method, referred to as the work measurement method, determine determines cost function by analyzing the relationship between input and output in physical terms. This is useful in repetitive process where input-output relationship are clearly defined. We, we have account analysis method, we have high and low method, we have regression analysis method. I've mentioned this the other time. So there are various ways in which you can actually separate your cost. You can use scatter diagram, you can use regression analysis, you can use high and low method, you can use account analysis, you can use engineering method. Under the account analysis method, the ledger record are used to analyze information into variable, semi-variable, and fixed cost. Discuss the concept of cost estimation and techniques. I believe we are still together.
Yes.
Are we still together? All right, thank you. Discuss the concept of
Yeah.
cost estimation and techniques. The need to estimate fixed and variable costs. To prepare accurate cost budget, it is important to understand how costs behave. Cost behavior refers to the way in which total cost increase as the volume of an activity increase. So cost behavior means when you are trying to analyze or understand the way total cost increase as the volume of an activity increases. It is normally assumed that total cost can be analyzed into fixed cost and a variable cost per unit of activities, such as variable cost per unit of a product or per hour or services. Some overhead costs are a mixture of fixed cost and variable cost, but this can be separated into a fixed portion and variable portion. All this one, all this one, they are what we have already explained. A full explanation of each of these techniques is replaced here for your analysis. They are still trying to repeat what you have been taught the other time. We have high and low method. They will give you the figure for the total cost. They will give you the activity level. They can give you like 5 or 6 informations showing the total cost and the activity level. Total cost and the activity level. If you have forgotten, I'm just trying to remind us now. You will now go and pick which one is the highest, which one is the lowest. After you have gotten the highest and the lowest, you will subtract it from each other. You will subtract total cost of highest from the total cost of lowest. Then you will subtract activity level of highest from the activity level of lowest. Then you will get a particular answer. After you've gotten that, you will now divide the total cost by the activity level. Then you will now get variable cost per unit. Are you getting me? Are we
Yes.
together? All right, thank you. So if
Yeah.
you can try to revisit those high and low method again. Maybe subsequent class, maybe I will still come with a question on that, and if God will, we can come across a question like that in this our words, in this um, our explanation. So that is what they are just trying to explain here. That's what I've explained this, how you can use high and low method. I said you will take the highest, you will take the lowest, the variable cost per unit of the active level can be calculated. Difference between them, I've already said it. So having calculated the variable cost, you can now use it to you can now put that particular information into the cost function. So I don't know. I don't know, maybe you are getting me. Are you sure you are getting me? Are you sure you are getting what
I'm
I'm trying to?
getting you. I get what
All
you are
right.
trying to.
All right. Thank you. Thank you so much for that. So we can, okay, thank God. We even have a question here. Example, high and low method. You can see now we have 5,000. We have this unit. This is unit. This is what? This is this is cost. So if you want to do this now, if you want to do this now, let us try to go to um, all right. So we go and check. We will check our question. This is the question. We have January, February, March, April, May. Which one is the highest out of this? Which one is the highest out of
The
this?
highest production the highest production unit is in March,
Is in March.
8,200.
This that means this. And which one is the lowest?
The lowest is in January,
Is in January, 5,000.
5,800.
So you see, let's even use this one. You see now,
Sorry,
this is now what we have done here.
are
We are going to do
you
this is highest. This is highest.
are you there?
This is highest. This is the
Can you guys hear
unit.
me?
Like,
Yes, we are
Carlos
with
is
you.
trying to say so.
We are with you. We are with you.
Okay. I think it's looking like I'm checking a different. Or which one are you guys checking? Okay, I've basically seen it. I've seen it. You can continue.
We have seen it now. Thank you.
Okay,
So
no part.
So now, this is the highest, this is the lowest. Then you subtract the total cost from the, no, sorry, the unit, the highest. You subtract the lowest from the highest. 82 minus 58. It gives us 24. Then you do the same thing for this. Total cost from this. So we get this. Now, for us now to get the variable cost per unit now, we can now come here, we can now say 48 divided, to get the total cost per unit. Cost per unit CPU equals what? Equals your total cost divided by your number of activity level. Activity level. So as we can see in our question, we have what? We have is it not 84, right?
Yes,
84 and 24. So we say 8400 divided by 2400. So whatever you have is your cost per unit, variable cost per unit. That is your variable cost per unit. So now, having gotten our variable cost per unit, we can now substitute it into that equation to separate our cost. So what is our formula again? Remind me our formula again.
A plus BS is total cost is equals to A, Y is equals to A plus BS.
Y is equal to A
Plus
plus
BS.
Bx. So let's say we want to use the highest now. Let's say we want to use the highest figure. We already know that our Y is the total cost, right?
Yes.
So what is our total cost for the highest?
The total cost for highest is, doesn't match, 48,700.
700 equals, what is our A?
A is the fixed cost.
Fixed cost, we don't know. Plus, what is our B?
Variable cost, that's 3 naira, 5 kobo. 50 kobo,
3.5.
sorry.
3.5 multiplied by what?
X.
Multiplied by the number, the unit. We are using highest now. So what is the unit for the highest?
8,200.
8,200. So if you do this, you have 48,700 equals A plus 3.5 times 82.
3.5 times 8, so 28,700.
28,700. So we make A the subject of the formula. You know how to make A the subject of the formula, right?
Yes.
So we have A equals 48,700 minus
28,700.
minus 28,700. So our A now, our A equals Our A equals what like that? That is 20,000.
20,000.
So that means our, what's it called? Our fees cost will always be
Fixed
20,000.
cost.
Our fees cost will always be 20,000 naira. So you can even use if you use lowest method as well. Like the low, this is I now. This is the highest total cost and highest activity level. If you use lowest cost and lowest activity level as well, you will still get 20,000. You can check it. Let's check it out. So what is the lowest?
The lowest there is 5,000. Is January. The
Yes,
production unit is 5,800.
yeah, give us the total cost first. Why? What's our why?
Y is
40,300.
40,000.
40,300 equals, what is our A? We don't know. A plus,
A
we are
is
still going to use 3.5 multiplied by 5,000 what?
5,800.
5,800. So 40,000 equals, A is still there, plus, what's 3.5 times 5.8?
20,300.
20,300. 20,300. Then our A now. Our A equals 40,300 minus 20,300. So A now will give us what? A will give us 20,000. So that is how to use ICAN method. So let us move. So you can see what they've done here. That's what we have explained. That's what you have explained. You can go through it yourself. You see now, you see all this. You understand now? Are you still with me?
We are with you. Oh.
ICAN low analysis with a step change in fees cost. ICAN low analysis can also be used when there is a step increase in fixed cost between the low and high activity level, provided that the amount of the step increase in fixed cost is known.
It's breaking. It's breaking.
It is breaking. Why is it breaking? Are you with me now?
I'm with you, but I can't hear you well again.
You must hear me well. Why is it breaking? It's supposed not to be breaking. The network is
Your
good.
network. Clarity, your network.
Yeah. Just try. Maybe you should off and on your hotspot. All right.
Okay.
So if the step increased in fixed cost is given in naira value, the total cost of the high and low activity level should be adjusted by the amount of the increase, so that total cost of high and low amounts use the same fixed cost figure. After this adjustment, the difference between the high and low cost is solely due to variable cost. The variable cost can be identified and cost function constructed for each side of the step. The step for cost separation include, what are the steps? In the situation whereby we have the step cost, take the activity level and cost for the highest, for the lowest, just as we have done the other time. Make an adjustment for the step in fixed cost. Add the step in fixed cost to the total cost of the lower level of the activity, or deduct the step in fixed cost from the total cost of the higher level of the activity. Step 3. The variable cost per unit in activity level can be calculated as difference in cost, total cost, divided by difference in the number of activity level. Step 4. Having calculated the variable cost per unit of the activity level cost can be calculated by substituting into one of the cost expression, just as we have calculated it the other time. So let us see this now. Example, I know method with step cost. With step in fixed cost. A company has identified the total fixed increase by 15,000. Total fixed increase by what? By 15,000. When activity level equals or exceed 19,000 units. The variable cost per unit is constant over the range. So what are we now going to do now to this now? What are we going to do? What are we going to do according to the steps we have actually mentioned the other time? It is either we add this 15,000 increase to the lowest total cost, or we subtract from the highest. That means we can either add it to this 165,000, or we subtract it from this 195,000. I believe you are with me. Are you still with me?
Yes.
Yes,
All right.
bro.
So now this one now is just like a guideline. That's one of these why we need to go and look for a conk question that we can actually solve that will now shows to us that we have gotten this thing. But all these little principles are actually needed as well for us to be able to solve those exam type questions. Please take note. When we have a step cost, that is the fees cost is now being increased. For example, the NEPA bill. Let's say the NEPA bill before they have been giving you 2,000, 2,000, 2,000, 2,000. Just of a sudden, they just brought 5,000. That means they have increased it. There will be an issue. So for us to actually calculate to still be able to separate our cost, what we are going to do is that the portion, the incremental portion of that fixed cost, it is either we subtract it from the highest total cost, or we add it to the lowest total cost. Now, considering this information now, they have already picked the high for us, they have picked the low. We have the low production unit, we have the highest production unit. We have the highest total cost, we have the lowest total cost. Then we can now do what? We can now either add to the lowest, or we subtract from the highest, which we have done in this step 2. As you can see, we have 165,000 here. Then we add it back to this. Then we still have our activity level to be 17,000, but the step cost, the total cost is now 180,000. Then you can do what? You can just do the way we actually did it the other time. Just subtract it from each other. After then, divide it. After then, put it in your what? Put it in your equation. I believe you can do this, right?
Yes. But me, I have a question. No.
All right, ma. I'm
According to
with you.
the what is it called to the question, if a company has identified that total fixed costs increased by 15,000 naira when activities level equals or exceed 19,000 units. We only change the cost. We didn't touch the production units.
Yes.
Is it because its level is equal to or exceed 90,000 and the unit we are dealing with is 22,000 units, or we don't have to touch it?
All right. Thank you for that question. This is it now. They said that this company, they cannot, if they are still producing lesser, either total or equal to greater, either lesser or equal to 19,000 units, their variable cost will be this. But immediately they produce greater than 19,000 units, they will incur a step cost. Now look at it now. They have the lowest of 17,000. The lowest unit they produced in that particular period was actually 17,000. But the highest they produced was actually what? Was actually 22,000. Definitely, they must have increased step cost. They must have increased additional what? Additional cost, because they have produced more than this 17,000. You can see 17,000 here. Assuming they did not produce more than 17,000, assuming our highest was maybe 18,500 or 18,700 or even 18,900, there will not be a need for us to be adjusting. But because they have already produced more than that, more than that 19,000, they have produced 22,000. And that is the reason we are now trying to adjust the cost. That is the reason we say that it is either we subtract this particular figure, 15,000, from the highest figure, or we add it back to this one. So it is the cost we are adjusting, not the activity level, because the activity level has already been incurred. We are only trying to now see how much of this total cost they have actually incurred is for fixed cost. How much of this total cost they have actually incurred is for variable cost. That is what we are trying to track. Do you get it now?
Yes, I have a question.
Yes,
All right.
it's
You've gotten it right, Sis Charity.
thank
All right. So I'm with you, Mr. AY.
Okay. The question says, because I'm going through this solution now, and I don't still get it. The question says that a company identified total fixed cost increase by 16,000 a year when activity level equals or exceeds 19,000 units. So what is the activity level, which is the production unit, equals or exceeds, meaning the high one is one to add 15,000. Why is it that we're adding to the low one, which does not actually meet up or exceed the whole thing?
Though your what's it called? Your what's it called? The voice is actually not really clear. But if I can get you, you are still asking the same question Sister Ife asked. That why are we only adjusting um total cost? Let us go back to this.
No, wait.
I
I
and low
think
analysis with step changes in fixed cost. I and low analysis with a step changes
Can you hear
in
me
fixed
now?
cost. Yes, it seems it is getting clearer now.
Hear me?
Yes, I can hear you now. I think it's clear now.
So my question is that they said that when activity level exceed or equals 19,000 units, and from the
Okay.
chart that we have here, or the table we have here, the I one is the one that exceeds it, which is 22,000 naira. Then why are
Okay.
they adding the 15,000 naira to the one that does not actually meet up the price? It should
Okay, thank you.
be added to the 22,000. So far, they said the one that is equal to or exceeds.
All right, thank
Do
you.
you
Thank you
get?
for that. Yeah, I get you. Let us go to the steps. The logic is that, when something is greater than what's supposed to, like you get an outcome that is greater than the outcome you are expecting. You were expecting 19. You now get 22. And for you to actually get the cost per unit, you need that 19. It's either you subtract the difference between 19 and 22 from 22 so that you are going to have 19. Are you getting now? That's what they are trying to do here. They have already said that there are two ways to do this thing. For us to still get the activity, the normal cost, variable cost per unit that we can actually use in separating the cost. It is just like a logic. It is either we subtract that difference from the highest because it's the one that has incurred more cost, or we add back to the lowest so that they can be at equilibrium. I don't know if you are getting me now. If you check that question, they said that if they produced up to or greater, if they produce greater than 19,000, they will incur additional cost of what? Of 15,000 naira. Then we now see that, okay, this chart, it says the highest is now 22,000. We can say that let us subtract 15,000 from this 19,000. While we leave this 165,000, we leave it like that. Or we say that let us add 15,000 to this 165,000, while we leave 195,000 the way it is. So you can use whatever method you want to use. Do you get?
I understand. Thank you.
Yes. So that is how it is actually. You can use whichever method, but just make sure that you either add or you subtract. Once you add to 165, you have already make both of them to be at like equilibrium like that. But if you interchange it, let's say you now add back to 165, 165 has already gotten more than what's supposed to get. No, 195 rather. 100 has already gotten more than what they are expecting it to get already before. So you are not expected to add to it, you are expected to subtract. Then once you subtract from it, you will have what's supposed to have. So please, thank you. Please try to check it again. Try to check it so that you will be able to solve, you'll be able to separate the cost to fixed and variable cost. And there are also some situations whereby they will now tell you that they will give you a particular unit. They will now ask you to calculate total cost for that particular additional unit. Let's see. The company planning 20,000 ahead. This is something. This is just an example of what I'm expecting. So the company is planning to make 20,000 units and wish to estimate the total cost associated with that level of activity. So let us still try to solve that question so that we can use this particular information. Now they are setting the question as if that first one. No, so this question we just finished solving, that I just finished explaining now, and this particular aspect, they are the same. Are we together?
Yes, we are together.
So now let us try to solve it together. Let us try to solve it together now. Let me even copy the question. Let me copy it. So we have an assumption that these questions are together now. These questions are together, and we have this guy, this high and low. Sorry, I'm unable to copy this one. But we know that we have 20, we have 195. We have 22. So let's say our I is 22,000 for production, and then our cost is what? 195,000. Why the low? For low, we have 17,000, 165,000. 17,000, 165,000. All right. So with the question, what we have here now, we can either say that we want to add to the lowest, or we subtract from the highest. So which one should we use now? Which one should we use? Give a suggestion. Someone should give a suggestion though.
I didn't even see the question you are solving.
Can you see my screen?
It's low. I didn't see anything, no.
I think it's your network, or is your network? I can see it.
Just try to
Okay.
on and off your hotspot. So let's say this is how the question look like. So now,
Okay.
me, I will advise that let us subtract from the total cost. So we now have I. Our I will now be 22,000. While our total cost will now be 195,000 minus 15,000. Then our low will be 17,000. Then we have 165,000. Then the revised now be what? The revised will now be I. I will now be 22,000. So 195 minus 15. That should be 180, right? Are we still together?
Yes.
Low will now be what? 17,000. And this one will be 165,000. So now let's subtract it from each other. 22 minus 17. What do we have?
5,000.
5,000. Why 80 minus 165?
15,000.
Ma? 15,000.
15,000.
So our variable cost per unit now. Variable cost per unit. Now be what? 15,000.
15 divided by 5,000. 15,000 divided by 5,000.
Thank you. Then we have what? We have 3. 3 naira. Yes. 3 naira. That is our variable cost per unit. So let us now separate it. We now have y equals, what's our formula again?
Y is equals to A plus BX.
Bx. Then let us use, which one should we use? High or low?
Let's use low.
Low. Okay. We have total cost for low is 165,000. What is our A? We don't know. Plus what? 3 multiplied by.
Plus 3 times 3
Okay. 3 multiplied by 17,000. So what do we have? 165,000 equal to A plus 70,000 times 3. $70,000 times 3. Are we still here?
Yes, I'm able to.
70,000 times 3.
That's 51,000.
Are you sure? 17,000 times 3. Okay. 17,000 times 3. Okay, 51,000. So we then have what? We now make A, that is the fixed cost, the subject of the formula, 165,000 minus 51,000. So our A now, which is fixed cost, is now what? 165 minus 51. What do we have? What do we have?
What did you say, sir?
What do we have? 165 minus what? 161 minus 51,000.
165 minus.
Have you gotten the answer?
Minus 40. What did you say? 165 minus what?
161. Can you see my screen?
It's kind of blurry. Okay. I'm seeing the screen now.
Yes, it should be your network. So 165 minus 51 is 51,000.
That's 114.
114. So that is our fixed cost now. So let us now go back to the question. The question now said that the company is planning to make 20,000 units and wish to estimate the total cost. So this one now, they want to know the total cost. They've told us that the company wants to know the total cost of 20,000 units. What we are just going to do is that just use that same formula. Y equals A plus BX. So what is our Y? We don't know our Y. Y is what we want to look for now. We don't know our Y, but we know our A to be what? Our A is 114,000 plus B. What is our B? 3 naira per unit multiplied by what? Multiplied by 20,000. That is the total number of units they want to what? They want to produce. Then we can now say Y equals 114,000 plus 3 times 20. That will be 60,000. You can now say our total cost, which is Y, now equals 114 times 60. 114 plus 60. That should be 174,000. Do we get it now? Do we get it?
So,
is it clear?
It's clear.
Okay, thank you. Thank you. So let us continue. All right. We have high and low with step in fixed cost. Just as what we have done, you can just revisit it again. You can revisit it again. Just the same thing. All right. We can also use linear regression analysis. You know, we said the other time that we can use scatter diagram to separate cost. We can use high and low method. We can use engineering method. We can use account analysis method, and we can use regression analysis. So this is linear regression analysis is a statistical technique for calculating a line of best fit from a set of data. Y is equal to A plus BX. The data is in pair, which means that there are different values of X, and for each value of X, there is an associated value of Y. So now, all these ones, they are just story. So let's go to the formula. This is the formula for regression analysis. These are what we actually familiar with, even from school. We have B is equal to what? Okay, this is the formula. Just as we have the formula here, Y is equal to A plus BX. But we need to calculate our B. We need to calculate our A. For B now, the formula for B. The formula, okay. The formula for B is N summation XY all over summation XY minus summation X summation Y all over N summation S minus summation X close bracket raised to power 2. So where X and Y values of pair of data, number of pairs of number of value of X and Y, the sign unit, that's summation. That summation means sum. That sign means sum. And we have X independent variable units of activities. So this is what the technicality here. You should be able to identify or differentiate between your X and Y. X is the independent variable,
Oh, can you
unit
please
of
turn
Y.
off your mic?
I said that the technicality there is just the ability to identify X or differentiate between X and Y. But don't forget, Y is your total cost. Why X is always your what? Your unit of activity, your independent variable. Your what's it called? Your unit of activity is what? Is depending on the total cost. So your X is the unit, while the Y is the cost. All right. Y is the
Is
dependent variable.
not still in
X is
this line. Tell Carlos to turn off his mic, please.
if just if there is no if there is noise where you are, just try to turn off the mic so that we can maximize this our time. All right. So we have X to be independent variable, and our Y is what? Is dependent variable. A is the fixed cost, A is the fixed cost, and Y is the intercept. So B variable cost per unit of activity, I've already explained that. So we have this now. As you can see, this is 5.8. Who can tell me the X and Y now? What is your X? What is your Y? Ma?
Y is the output of units, while X is
Okay.
the total cost.
You have interchanged it. I said X is always your unit. Y is your cost.
Oh,
So the
sorry.
total cost is your Y. The 5.8 is
Okay, it's
um
depending on the unit.
your unit. Yes, is your unit. So let us should I work it out or we understand this?
This one is common, is what we've done in school now.
Exactly. So we should be able to do it, right?
Yes.
So for the purpose of YouTube audience, so for the purpose of YouTube audience, you just this is your X 5.8, 7.7, 8.2, 6.1, 6.5, 7.5. Then this is your Y. Then we have X squared. You just square this 5.8, that is 5.8 raised to power 2, we give you 33.64. You do for all like that. Then X, then Y. You are going to multiply Y and X. We have 5.8 to be our what? X. We have 4.3 to be our Y. Then multiply the two. You have 233.74. So, and after you are done that, you are going to insert them into this formula. Then you get your B. This is your B now. Then after you have gotten your B, you calculate for your A. Your A is, the formula for A is summation Y all over N. B summation X all over what? All over N. What is your summation Y? The total of what? Of Y, which happens to be 268.3 divided by N. Count the number 1, 2, 3, 4, 5, 6. That is what? That is 6. Then B, what is our B? We have already gotten our B to be 3.585. Summation X. What is summation X? Which is 41.8. You then put it here and then you divide it also by 6. Then you what? You get your what? You will get your A. So having gotten your A, you can now insert it into the what? Into the line, into the slope, into the formula that is Y is equal to A plus B X. Thank you for that. So we have linear regression, analysis and forecasting. So these are what we can actually read up. So let us move to absorption costing. Absorption costing measure cost of a product or a service as its indirect cost, as its direct cost rather. Direct material, direct labor, and sometimes direct expenses and variable production overhead, plus a share of fixed production overhead cost. It is a system of costing in which a share of fixed overhead cost is added to direct cost and variable production overhead to obtain a full cost. So absorption costing is just a system whereby, okay, we have some cost. We now try to, we have direct cost, and after we have direct cost, we still have some some fixed production overhead. We are now trying to reapportion or share those fixed costs. We are trying to share them on the what? On the direct cost we have already gotten. So it is a system of posting in which a share of fixed overhead cost is added to direct cost and variable production overhead to obtain a full cost. This might be a full production cost or full cost of sales. This was covered in an earlier chapter, but a brief revision is provided here for your convenience. Production overhead are indirect costs. This means that the cost, unlike direct costs, cannot be attributed directly to specific item product for which a cost is calculated. A fair share of overhead cost is added to the direct cost of the product using the absorption rate. A suitable absorption rate is selected. So what am I trying to okay, let me give you an example now. Let's say you are producing, you have a shop and then you produce cake. You also produce, what else can you produce? Apart from cake. Okay, you produce popcorn. Now, one is pastry. I don't know the name of others. Let us now say that it is still in the same building. You have these two departments in the same building. You now incur rent, you pay for rent. Where are you going to charge the rent? Will you charge the rent on pastry or you will charge the rent on popcorn production? You can see that the cost was jointly incurred. So there will be a need for us to actually share those costs between pastry department and that of what? That of a popcorn department. Then there is what we call absorption basis. We have floor space area. For rent now, we are going to use floor space area. Let's say it is electricity. Let's say it is electricity that both of them share. We are going to use kilowatt or megawatt, the kilowatt that was being used. So that is how we can actually do our what? Our absorption. A suitable absorption rate is selected. This is usually a rate per direct labor hour, a rate per machine hour, a rate per amount of material, or possibly a rate of per unit of product. Production overhead will be calculated for the factory as a whole. Alternatively, separate absorption rates may be calculated for each different production department. However, it is much more likely that a question involving absorption costs will give a factory-wide absorption rate rather than separate department absorption rates. The overhead absorption rate or rate is determined in advance for the financial year. It is calculated as follows. This is the formula to calculate overhead absorption rate. Total allocated and absorption overhead all over volume of activities in the period, total allocated and absorption overhead, volume of activities in the period, which is budgeted production overhead expenditure for the period over budgeted activity level. This is the formula for the overhead absorption rate. Now, budgeted production overhead expenditure for the period, you will be given budgeted activity level as well. But this budgeted activity level is also divided into various parts or various types. We also have various types. It can be budgeted hour, it can be machine hour, it can be unit of production. So whatever thing they give to you is what you are going to apply. All right. So we have the activity level is the number of labor. I said it, the number of labor hour in the year, the number of machine hour, or the number of units produced, depending on the basis of absorption, labor hour rate, machine hour rate, or rate per unit that is selected under and over absorption. Under and over absorption. Overhead absorption rates are decided in advance before the period under review. Actual overhead expenditure and actual production volume might differ from the estimated used in the budget to work out the absorption rate. As a consequence, the amount of overhead added to the cost of products manufactured is likely to be different from the actual overhead expenditure in the period. The difference is either under or over absorbed overhead. I think, are we getting it? Are we still together?
Yes.
All right. So we can either have under or over absorbed overhead. So under or over absorbed fixed overhead. Amount absorbed, actual number of units made multiplied by predetermined absorption rate. We get this. Then we have actual expenditure in the period. Then that is going to give us either it is over or under absorbed. This is the amount absorbed, the actual number of units multiplied by the predetermined absorption rate. That predetermined absorption is the one we use when we are doing our budget. Then we now what? We now subtract our actual expenditure in the period. So it is going to give us either on over or under absorption. That means if, let's say this first one now, let's say it is A. If this one is actually greater than the actual, then we have over. That means we have over budgeted. But if this actual is actually greater than this actual expenditure in the period is actually greater than the actual number of units that is multiplied by the predetermined absorption, the value we have here, that means we have under absorbed. We have under absorbed that particular product for that particular cost. All right. Overhead are under absorbed here. Overhead are under absorbed when amount of overhead absorbed into production cost is less than the actual amount of overhead expenditure. Overhead are under absorbed when the actual amount, I said it the other time, when the amount of overhead absorbed into production cost is less than the actual, is less than this, is less than this, then we have over absorbed or under absorbed rather. Then over absorbed, overhead are over absorbed when the amount of overhead absorbed into production is more than actual. That is over absorbed, as we have seen on the screen rather. So I've seen on the screen. All right. So we have an example here. A company manufactures and sells a range of products in a single factory. Its budgeted production overhead for year 6 were 150,000. Its budgeted overhead for year 6 were 150,000. And budgeted direct labor hour was 50,000. So can you calculate overhead absorption? Sorry, don't let us calculate here. Let us still finish reading. But what I want to try to explain is that we can use this information to calculate overhead absorption rate. We said that overhead absorption rate, I believe we are still together.
Yes.
Our overhead absorption rate, we said the other time that overhead absorption rate is equal to overhead absorption rate equals budgeted overhead all over budgeted activity level. So now, in that question we were given, we have 150,000 to be our budgeted overhead, and then we have, I think 5,000. Is it 50,000? We have 50,000 to be our project activity level. That means our OER is actually what? It's actually 3. So I just say make I just use that one to explain. Yes. So we have sales, we have direct material cost, we have direct labor cost, we have production overhead cost, production overhead, and it tells us numbers of hours. Then we have ahead now. You see production overhead now. This is the actual now. we budgeted 50,000 hours, but our actual hour is now what? Is now 40,000 hours. All right. There was no opening or closing inventory at the beginning of or end of year 6. The company used an absorption costing system, and production overhead is absorbed using the direct labor hour. The above information would be used to see now we have already calculated our overhead absorption rate. We have already calculated our overhead absorption rate. So now, if we now want to get our either under or over now, overhead absorbed, the total overhead absorbed was actually 40,000. Then we multiplied by the overhead absorption rate we have calculated, which was 3 naira. We get 120,000. So what is now the overhead incur? The actual overhead incur, it was, or it is 140,000. Are we still together?
Yes, we are together.
All right, thank you. So now, we have gotten this 120,000 overhead absorbed, the 40,000 hours multiplied by the overhead absorption rate we calculated. This is what we actually budget. But the actual amount we actually incur is what? Is 140,000. As we can see here, definitely we did not budget up to the what? Up to the actual amount we use. That is under absorption, because what we budgeted for was based on what? Based on 3 naira. But when the actual cost came, we have what? We have 140,000. That is under absorbed. That is under absorbed. That is under absorbed. Assuming what we have here is actually different now. Let's say we have let's say we have 200,000 as our budgeted direct, no, sorry. We have budgeted production overhead. Let's say it was 50,000. It was 200,000. That means 200,000 divided by 50,000. That will give us 4. Then if you multiply 4 by 40,000, we will have gotten 160. So that means we will have been having 20,000 as over. That means what we budgeted for is actually now greater than the actual amount we incur. I believe we've gotten that. So the full production cost now will now be direct material, our direct material, our direct labor. Direct material is 130,000, direct labor is 160,000, then our overhead, that is what? 120,000. Then we have 14. I believe we are still together, right?
Yes, we are together.
All right. So the profit for the year is reported. You know how we calculate profit now? You will subtract your what? You will go and subtract your sales. Let me write it out. To get our profits, we'll still go into this one in depthly. But let's say sales. Our sales was 630. $630,000. Then we have material, direct material, 130,000. Then we have direct labor, our direct labor 160,000. Then we have overhead. Based on what we budgeted, we have 140,000. That is 120. Overhead. We have 120,000. So if we add the three together, 130 plus 160, that is 410. We have 410,000. So if you subtract 14,000 from 630, We have 220,000. Then we now subtract our what? Our under absorption. And our under absorption happens to be 20,000. Sorry, please, sorry. We are not subtracting it. We add our under absorption. We add our under absorption.
I think that's 140,000 naira. 120 plus the 20,000, right?
Yes. Let me check. $410. 430. Sorry, we are still going to less. Sorry. Under absorption, you know that that particular under absorption, it is going to, before we said that our profit will be like this. If all things being equal, if this is what we actually incur, that was based on our budgeted. But now that instead the overhead has now increased, the overhead is now actually 140,000. That means our profit will have reduced. So I can just bring the under absorption here, I will just say 20,000. So another thing with PM is that there is no single way of getting your solution. The only thing is that just make sure you do the right thing so that you can get your answer. So here now we have 220,000. So our profit will now be 200,000. So let us see what they've done here. You see, now they added that under absorption to the what? To the cost. You know, the cost, the food production cost. When we calculated the production cost here, our own production cost happens to be 410 because we have not added the what? We have not added the 20,000 naira under absorption. We did not add it. We base it based on the budgeted. Then we now brought in the under assumption just to show. Assuming if someone actually want to calculate this, we'll have just brought the 140 here. If we brought the 140 here, we'll just get our 430. Then we subtract it from the what? From the sales. We get our 200. But we'll not be able to show or to prove that we calculated under assumption. So now that means under assumption will be subtracted from our profit because we did not budget for it, but we incur it. That is the reason, that is the logic. We did not budget for that under absorption, but we finally incur it. But if it is over now, we are going to add it back. Because we did not budget for it. Sorry, we budgeted more, but we did not actually use up to that. We are going to add it back to the profit. I don't know, maybe you get the logic.
Yes.
I will send a question on this by God's grace. I will send question on this over and under absorption, but I want us to get the logic very well. So please note it. I may actually decide not to show this. Don't forget how we get our overhead absorption rate. Budgeted overhead, no, for budgeted production overhead all over budgeted activity level. And your activity level can be machine hour, can be labor hour, can be numbers of units produced. Whichever one they give in the question, that is what you are going to apply. That's what you are going to apply. So I haven't done that. Let's see, maybe we can still cover some ground before we call it a day. So we have this 220. So if you want to get our profits now, we just subtract the expenses. So this now is they are trying to go into absorption costing. Yes, that is absorption costing for you. Assuming we are under marginal costing, we'll have been talking about contribution. We'll have been, after we've gotten our contribution, we'll have been saying that, okay, let us now bring our fixed cost. So this, in this question, is like a fixed cost now. So we'll bring it in, since they said we don't have closing inventory and we don't have opening inventory. All right, so that is what they actually done there. To get their profit, just subtract your administrative expenses and that of selling and distribution expenses, then you get your profits. All right. So we have marginal costing. We've even gotten there. We've gotten there already. Okay. Okay. We've gotten there. So we have marginal costing. Marginal costing is an alternative to absorption costing. In marginal costing, these production overhead are not absorbed into production cost, but expensed in the period. They don't have in marginal costing, in absorption costing, we absorb fixed overhead into what? Into production overhead. But in what? In marginal costing, fixed production overhead are not absorbed into product cost. They don't absorb it on material or what. They don't absorb it. Marginal costing is useful in decision making as it focuses on the changes in total cost brought about by an increase or decrease in a level of activity. This is covered in detail in later chapter of this test. The difference in profit between marginal costing and absorption costing. What is the difference? Yes, don't commonize this kind of question. They can ask. They can ask. The profit of an accounting period calculated with marginal costing is different from the profit calculated with absorption costing. What is the cause of the difference? The difference in profit is due entirely to the difference in inventory valuation. That is what normally causes the differences. Differences in what? In inventory valuation. The main difference between absorption costing and marginal costing is that in absorption costing, inventory costs include a share of fixed production overhead cost. The opening inventory contains fixed production overhead that was incurred last period. Opening inventory is written off against profits in the current period. Therefore, part of previous period costs are written off in the current period income statement. The closing inventory contains fixed production overhead that was incurred in the period. Therefore, this amount is not written off in the what? In the current income statement. All right. So I want us to call it a day here. What I'm going to do is that I'll bring a standardized question next class. I will bring a standardized question next class. I will also send a